Hi there, welcome to Kneppy Invest. Another trading week on the ASX has come and gone, and to be honest with you, it was not a good week. Down, maybe not significantly, but definitely down about 1%. Yeah, about 1%. Now, I am recording this video at 3:20 p.m. on Friday, the 27th of October, and I do use TradingView to show you the charts. TradingView is 20 minutes delayed, so yet to go through the closing auction in TradingView. So it says here that XGO is at 6,833.3. That's at the end of trading before the closing auction has come to an end. And the XGO actually closed at 6,826. So there was a little bit of selling during the closing auction, maybe not during the closing auction, but at the closing auction. Maybe that's just day traders getting out because they're unsure about what's going to happen on the international markets. Overall, it was a negative week, as I think I've already mentioned. And at the start of the week, we're at a very important level, 6,900, after a pretty bad week last week. Last week down 2%. This week down another 1%. So just over 1%. And not only that, when we look at the daily chart, you can see the XGO has fallen below the bottom of this trading range, fairly important trading range that we've been in since late 2022, early 2023. So right now, even though we're just a little bit higher than the lows we saw on the Thursday, right now we're almost at a 1-year low in the XJO. And in fact, if you do look at this chart, it is actually a bearish signal. So we had a little bit of a bounce after the most recent low about a month ago, and the XGO bounced into the short-term moving average, and then we've now seen a lower low. So potentially we're in a downtrend for the XJO, the beginning of a long-term downtrend. Who knows? Wouldn't be surprising to see a bounce from here, or if we continue to see concerns within the wider economic environment, maybe there's way more to fall. The next support level for the XGO, I think I've mentioned this on one of my videos last week, is around about 6,500, which is this sloping orange line. Now, this is the long-term trading channel, or the bottom of the long-term trading channel. I can see that in the weekly chart. If it comes in, just take your time. So the long-term trading channel for the XGO has been in place since 2009, and only once have we fallen, or the XGO has fallen below that, and that was during the COVID-19 financial panic, which is understandable. So that would be the next support level for the XGO, around about 6,500. Where do we get there? I don't know. I can't see the future, but if I was a trader just using technicals, I would be bearish right now in regards to the XGO, which is counter to some experts out there who say we're in a we're in a bull market right now, which is absolutely ridiculous. Although they could be regretting their words right now, because I heard these people say we're in a bull market a few weeks ago. Maybe they said it when we had that bounce. So when was that bounce? The top of the bounce was the 11th of October. So maybe they thought it and said it around then. But even then, that would have been a ridiculous assertion to make. That we're in a bull market right now. So interesting week. We had CPI numbers come in, slightly above expectations, just slightly above. And we know exactly when. It was on Wednesday, but exactly to the minute when the CPI numbers came out. So let's have a look at Wednesday. You got to see. Actually, we won't look at 1 minute. Now we look at 1 minute data. So Wednesday was the 25th. Here we go. So the CPI numbers came out at 10:30. We know that because in that 1 minute of trading, the XGO fell at 0.25%, and then the next minute of trading, it fell another 2.2%. So because the CPI numbers were a little bit above expectations, that's why there was a tiny sell-off at that point in time. Now, when we say they were above expectations, we're not talking about like 0.1%. I think September quarter, if I remember correctly, came at 1.2%. I've had some people say, this was a few quarters ago, well, if you analyze this 1 quarter of 0.1% inflation, you get very small inflation for the whole year. You can't really analyze inflation in 1 quarter. I think that's a fool's game, a mug's game. Anyway, so Interesting week in the XJO. I'm not going to show you NASDAQ or anything like that. I'll wait to the portfolio and technical update. One thing I am going to show you in this, and this is something I've been showing in any of my videos recently, is Bitcoin. I saw Bitcoin price and I went, oh, what's happened with Bitcoin? Probably fairly similar to gold, but Bitcoin is at or broke through a resistance level at about 31,000 or just above 31,000 on, what day was that? Got to decrease my face there. Could have just moved the chart on Monday. So it broke through the resist level on Monday. In fact, on that day, Bitcoin rose 10% and kept on rising the next few days. And right now, Bitcoin is at, last time Bitcoin was this high was back in May 2022. So we are talking about an 18-month high when it comes to Bitcoin. Is this the start of a next rally in Bitcoin or cryptocurrencies? Now, I'm not sure if I've mentioned this. I actually do own $2,000 worth of Bitcoin. Maybe it's a little bit higher now. And it's just, there is reasons behind that, which I won't get into in this particular video. The reasons actually stemmed from about 2 or 3 years ago. Now, I don't have a lot invested in Bitcoin, only Bitcoin, no other cryptocurrency. And I don't have a lot invested. And there's one or two reasons. And in fact, it has a lot to do with not really Australian or we'll say first world countries. It has more to do with the potential of Bitcoin or cryptocurrencies in third world countries. And in fact, it was Lebanon and how much inflation was really, and not only inflation, but also unemployment, how it was really stifling people in that country. And that's when I realized after hearing a person speak there that Bitcoin or cryptocurrency can really help people in those countries when governments are really suppressing the income growth of those people. And that's what seems like governments try to do. Governments around the world try to suppress income growth of people. And that's just, and Bitcoin and cryptocurrency can possibly solve that. And the absolute bull case for cryptocurrency, particularly Bitcoin, is that eventually becomes a reserve currency, which probably the probability of that happening is fairly low right now, but who knows, as we go through time, maybe it can become more accepted. The other thing about Bitcoin, if it does become a reserve currency, you can't have any volatility. The volatility has to be very small. So there has still a lot of volatility in Bitcoin and cryptocurrency. But if it does, a very small chance of it becoming a reserve currency, the price of Bitcoin has to be significantly higher than it is right now. So if anyone out there actually is or has a lot of money in Bitcoin or any cryptocurrency, I'd like to hear your opinion on why that is so. So it's only a small stake at this point in time. I could increase that if my confidence in cryptocurrency actually does increase. I'm not one of those people who thinks it's a sham. Don't think it's a sham. I think there's definitely a bull case for cryptocurrency, in particular Bitcoin. Now into individual companies, and I'm going to start with a company called Immutep, IMM. And of course, TradingViews decided to go really slow. So Immutep on Monday released an announcement and the share price rose 20%. So, and pretty good volume coming through. But if you look at the daily chart here, it's just share price going sideways. And I wouldn't even call this a breakout. And the main reason for that is because this company's share price is not at least a 6-month high. So over the past 6 months, the share price has been higher than this. So if we didn't see, what happened on this day? So on the 18th of May, this company's share price rose 33%. If we didn't see this little peak in share price or this dual peak in share price for Immutep, if the share price was down significantly more, and then the company released this particular announcement, which I'll show you in a second, and the share price was at least a 6-month high, this could be a breakout, share price breakout for Immutep. And if you don't know the psychology behind this and why this is not a breakout, is because shareholders would have bought into Immutep back in May, and even in July at higher prices. They saw the share price fall after they bought in, and immediately they think this company is a dog stock, because the mindset of a lot of investors right now is if the share price doesn't rise immediately, it's a crap company. And they want to sell almost immediately. I can confirm this is a mindset of a lot of investors. I have heard investors say this. As soon as the share price gets back up to where I bought, I'm going to sell because this is dog stock because the share price fell. So don't ignore the psychology of investors. And when you talk about the psychology of investors, because there's a lot of investors, it actually does play out in the broad sense. That's why, because the share price popped up in May and again in July, there's a little bit of resistance. And that's why we did see a little bit of selling. Now, the good thing is there wasn't sort of the demand and supply of shares was met. That's why we didn't see share price fall significantly. And you can see that just in the volume, a lot of volume coming in. So Immutep market cap 380 million. Jeez. So let's have a look at Immutep. Now, we all want this company to succeed with what they're doing because this is a cancer research company or something like that. So the announcement that caused a little bit of excitement in the market, Immutep reports promising data from Insight 003 trial. Pretty sure, maybe it was it was on the 23rd. Excellent overall survival in non-small cell lung cancer. I'm pretty sure that was the 23rd. Yes, 23rd. Share price rose 20% on that day. So we hope they're successful in finding maybe not a cure for lung cancer, but definitely something that can improve the quality of life of people that do have non-small cell lung cancer, whatever that is. I'm not going to even open up this announcement because a lot of what they talk about in this announcement just goes over my head. But market liked it. And share price hasn't dropped significantly. That market cap, though, is really, really high. I doubt this company has any revenue just yet. So it's all based off potential. I could be completely wrong. Let's have a look at the Appendix 4C from by quarter. So we can see straight away this company has any receipts. $16,000 of receipts in the last quarter, $87,000 of receipts for the year to date, burning through a lot of cash. In just operations, they burn through $36 million of cash, but they do have a lot of cash on hand, $76 million of cash on hand. So obviously they've done some pretty big capital raisings. Oh, actually, no, I'm wrong. They raised $80 million of cash. I've got to look at the right sector or section, and they currently have $123 million of cash because of this massive capital raising. Anyway, I wonder if they did the capital raising just after this peak in share price. It would have been a good capital raising if they did that. It's exactly what management should do. They should look at peaks in prices and do capital raising when the share price is at elevated level to dilute their shareholders by a lower amount, if that makes sense. So that's Immutep. I have done no research on this company, but obviously the market likes it. Let's have a look at the weekly chart. Always like to look at different time frames. And when you look at the weekly chart going all the way back, well, it looks like share price has gone down a fair bit. Anyway, main reason I don't really follow this company is they have very little revenue or receipts. Next company is a company I actually had in my week that was video last week, if I remember correctly, and that is Bapcor. Actually, I might have actually definitely did a standalone video on this company because of their AGM. They did a trading up in their AGM, and the share price plummeted on that day. Share price decreased, what was it, 11.5% on that day, and then a further 7.6% the next day. And the share price has kept on falling. So the market definitely hasn't liked this, what they revealed at the AGM. Share price keeps falling, not even much of a bounce. There was a bounce on the Friday, the 20th of October. The share price keeps on decreasing. The main reason I wanted to include Bapcor in this video is because of this. So this is market view, and I'll just zoom in. So I do like Market View website. Tells you directors and management. So the CEO and managing director of this company is Mr. Noel Meehan. And just below the directors and management section, they do have director transactions. So some people are really interested in seeing when directors, CEOs sell and buy. And if we have a look at director transactions, you'll notice it's all buying. It's all buying. Not only one or two of the directors, a lot of them are buying. In fact, on the 18th and 19th, a massive amount of directors bought on market. Noel Meehan, the CEO, he's buying a lot, valued $200,000 on the 19th. And if we go through this, he bought $300,000 of shares on the 6th of September. And even before that, on the 26th of October 2022, no, that's the issue of securities. That wasn't him buying on market. Oh, just before that, he bought 250,000 shares on market. So he keeps buying shares, this Noel Meehan. Now, director buying shares on market in the company he is a director of is not necessarily a good sign. A better sign or better signal is when few or numerous directors are buying on market at the same time. That is actually a signal, and even a better signal is if the value of their on-market trades was substantial. Now, some of these I probably wouldn't consider substantial, like Brad Solar bought $19,000 worth of shares. They probably are way more richer than that. But it is a sign that some of the directors, if not all the directors, think there is value in Bapcor right now. Now, you could argue the same thing last year. There were quite a few directors buying on market when the share price was as high as $6.72. And the share price now is $5.41. Is that right? $5.40. So just because directors are buying on market doesn't necessarily mean there's value in the company. So just keep that in mind as well, the back of your mind as well. So that's Bapcor. Company called MAP. Well, the ticker code's MAP. I forget what this company is called. Let's have a look. It's MAP Microbiology or something. Microba Life Sciences. Now, this company on the 23rd did a capital raising. So the share price at the time was, I'm going to give it away here, 32 cents. They did the capital raising. Always like to look, whenever I see a company do a capital raising, I like to see the discount. So the share price was 32 cents when they did a capital raising, $20 million. And sometimes you have to go through this fairly quickly, not quickly, but it takes a while to get it. The institutional entitlement offer was made at 23 cents. So 23.8% discount to the theoretical ex-rights price and 28.1% discount to the last close price of Microba shares at 32 cents. So what do you think happened to the share price? We'll sort of give it away. Share price dropped to the capital raising price. It always, well, maybe it doesn't always happen, but it happens a lot. Share price dropped 32.8%. In fact, the share price closed below the capital raising price at 21.5 cents on the Monday and has stayed in that range ever since. So this is sometimes why when a company does a capital raising at a significant discount to the previous share price, it's not necessarily a good thing. And sometimes they say we have to do the capital raising at a discount to entice institutions or shareholders to buy, but when the share price likely is to fall to that capital raising price, these institutions now can't just flip their shares when they get them and make a small profit because share price is right at the levels or even might be below the level of the capital raising. So not necessarily a good thing to do capital raising at a discount. I prefer to do capital raising at a premium. If I see that, I get very excited. Anyway, the share price or the chart looks mediocre for Microba. Not even sure this company has much. So in the last year, it had revenue of $3.3 million and lost $7 million. So obviously, market cap $78 million. So obviously the market, well, $78 million. I wouldn't say the market believes in this company just now or thinks the company has a lot of promise. But I'm not interested in Microba just because of the lack of revenue right now. A company called Plenti, I believe it's called. Now, I'm not that interested in these type of companies just yet. It's a fintech company, lending money, that sort of thing. And this company did to sort of a trading update. Strong credit supports profitable growth. Released this on the 24th, which is Tuesday. And, well, that's not the one I wanted to look at. And of course, it's going to take ages for this to open up. There we go. So it seems all positive. Loan portfolio growing at 47% CAGR, 2-year CAGR. So everything's growing. First half 24 cash net NPAT of 1.5 million. Quarterly revenue of 51 million, 53% above previous corresponding period. I believe this was a little bit better than expected. I'm pretty sure that's what they said somewhere here. So slightly better than expected. I can't find that right now. Of course, I can't find it. But anyway, the problem with these sort of companies, they're in the doghouse right now, and Plenti is one of those. So even though there was a nice little reaction from the market, share price actually did increase 7%. You can see that's a small blip when you look at the chart. And overall, the share price of this company is in a well-defined downtrend. Look at that. This is an ugly-looking chart, but for all these type of companies, the charts are looking really, really ugly. And because of CPI numbers coming in a little bit higher than expected, the chances of another interest rate rise a little bit higher now, and these companies might be negatively affected by that. When you look at the chart, possibly the low has been reached, 32 cents. What I might do for this company is actually put it in right now. The reason I say that is if you just look at that daily chart, the share price reached 32 cents back in March, then again in June, and then again in September. And every single time it gets 32 cents, we see a little bit of bounce. But the bounces are becoming lower and lower, or the top of the bounces are becoming lower and lower. So there's less and less strength in bounces. And I wouldn't be shocked to see share price fall through 32 cents. Other companies in this area, Money Me. This is a shocking chart. Oh, it's even worse than Plenti. Prosper. Not as I think Money Me might take the cake, but they've all got the very similar charts. So very out of favor right now. That's probably the word. Really out of favor. But I think there will be a time, possibly, when some of these companies look really attractively valued. Maybe not now is that time, but maybe eventually. Now on to Zip. So Zip actually did release an update, and I won't say I got upset by this update, but I just think it's ridiculous. So first quarter financial year 24 results, Zip achieves positive group cash, not EBITDA, EBITDA. They just left the interest out. And I don't like that at all. Use the same metric. If you're going to use EBITDA or EBITDA, also say what your EBITDA was. And the reason why I hate them using EBITDA and not just completely ignoring interest is because interest is a real thing for this company, and it's become an even more real thing because of rising interest rates. To just prove that point, let's go to have a look at the preliminary final report for financial year 23, just to see what the interest expense was. And here we go. Okay, so let's have a look at the interest expense. Now that's assets, that's the balance sheet. Interest expense, $165 million. Yes, $165 million. So when they say achieves positive group cash EBITDA without the I, if you take that interest, $165 million into account, that's a massive. Yeah, that's massive. It's huge. So you've got to, in my opinion, you have to take that into account. You just can't look at that number and say, wow, the EBITDA positive, ignoring the interest is simply ridiculous. Now, initially the market did like it. Share price did rise on the day about 7%, but yeah, share price has fallen back to where it was previous to that. So there was some interest in the market. Maybe the market investors just saw that positive EBITDA, went, oh, wow, they're positive EBITDA right now, but there was no I in that, and I just don't like that at all. Don't like it at all. I'll say that again. I just don't like that at all. Use EBITDA. Next company is KPG, which is Kelly Partners. Not the sort of company I am interested in. Now, they do something a little bit different. They released a trading update on the 24th. KPG delivers 27% increase in quarter one underlying attributed NPAT before amortization. NPATA. That's another thing I don't like. Underlying attributed NPATA. Just tell me about profit, that sort of thing. Although possibly there was one-off which really affected amortization. So maybe amortization in this particular quarter was abnormally high. I haven't really gone through this announcement, but I just don't like when companies are using, they manipulate the numbers to get what they want. It's sort of like a marketing tool. I understand why they do it, but I prefer all companies to do the same sort of thing. Use profits or cash flow. I'm not even a big fan of EBITDA in itself. But anyway, Kelly Partners, it's when we look at the chart, it didn't on the day, it didn't really do anything. Now, I actually will show you something here. In their announcement, they did show something that was really interesting, a history of their company's performance. Here it is, metrics since IPO. So we have 1, 2, 3, 4, 5, 6, 7 years of history. And if you actually do have a look at this history, they're doing really well. So revenue has almost tripled. Underlying NPATA has almost doubled. Underlying EBITDA has sort of in between doubled and tripled. So things are moving in the right direction for this company. Underlying NPATA from 3.4 million to 5.4 million. Dividends per share from 0 to 6.44. Return on equity between about 25 and 30%. Return on invested capital. They've included return on equity and return on invested capital, two things I like to look at, and return on invested capital at 24.4%. So if you just look at some of the metrics for this company, it looks really interesting, maybe even cheap. But I just don't like these professional companies, lawyers, accountants, those sort of companies, when they're relying on human labor, not the human labor, but humans, skilled humans, skilled labor, that sort of thing, because the IP or the intellectual property is with these people, and they can move from company to company. And if you don't want to move, you have to pay them more money, because human labor costs a lot of money, particularly these professionals. That's one of the reasons I don't like it. But this company has performed really well. And they also, their dividend, if I remember correctly, it's either a monthly dividend. Yeah, it's a monthly dividend, which is one of the only companies on the ASX who does that. Next company is a company called Findi, F-I-N-D-I. Not actually doing this company, by the way. F-I-N-D-I. So on the 24th, capital expenditure and cash flow, financial year 24 guidance, investor presentation. And they've gone into a trading halt on the 26th, which I didn't realize until right now. So as this opens up, look at Findi, share price has fallen a lot. So this company has not completely changed their business model, but they have gone through a few things, and now they own like ATMs in India, and they have increased their exposure in the past few years. And this company looks, well, because I am a shareholder, small shareholding, I might be a little bit biased. Now, the share price did increase on this day by 13% because it was interesting. Now, this company has a market cap. Let's have a look. FND. I'm going to say the market cap of this company is 25 to 30 million. Let's have a look. Oh, I remember, yeah, 19 million. Market cap of this company is $19 million. So keep that in the back of your mind when I show you some of these numbers for the quarter. This is really good. Processing over 1 billion transactions a year. A company is estimated to deliver total revenue and EBITDA of 67.3 million and 23.6 million in financial year 24. Remember, this company has a market cap of less than $20 million. Revenue 67.3, EBITDA 23.6. Now, again, I'm not the biggest fan of EBITDA, and this company goes from EBITDA 23.6 million to much lower profit, but they do go through it in this video. So operating cash flows, this is what I like. I don't really care about the EBITDA. Operating cash flow, $4.7 million in financial year 23, $20.6 million forecast in financial year 24, $20.6 million of operating cash flow, which is greater than the company's market cap. Now, this company does have debt, so the enterprise value of this company is more than or higher than $20 million. They also have a free cash flow section somewhere here. Nice growth, revenue's growing, EBITDA's growing. Quarterly operating cash flow, not the one I want. Here it is, a free cash flow bridge. So financial year 24 EBITDA, 23.6, operating cash flow, 20.6, a capital expenditure, 6.1. So to get from operating cash flow to free cash flow, you just subtract capital expenditure from the operating cash flow. So the free cash flow of this company, the forecasts free cash flow of this company is $14.5 million. And with that money, they have repaid $6.8 million of debt. So their free cash flow after repaying debt is $7.6 million, or is forecast to be $7.6 million. And they do have a cash flow positive. It's a really interesting announcement anyway. And they also have a quarterly net debt position. This is forecast. They also have a forecast. And right now they have net debt of 21.7 million. So 35.4 million of cash reserves, corporate debt of 57.1 million. So preferably, I like this company to be net cash, not net debt. That's my main problem with Findi. I don't even know how to pronounce it. But this is probably one of the most, this is by far the best presentation this company has released. And there is no way I will sell my shares in this company right now, just because of, I think there is asymmetric risk with this company, and it's really swayed towards the rewards section. The risk in this company, I think, is fairly low. You might say, well, they have operations in India, so there is that geopolitical risk, but I can't think of any. This is not China. India is a little bit different than China, put it that way. Anyway, they went into trading halt today, which I just noticed. So possibly, and this could be me being a cynic, the whole reason they did investor presentation on the 24th was because they want to do a capital raising. I don't know why, maybe to pay off the debt. So let's have a look at this trading halt. Just shows you sometimes I don't really follow the announcements of companies I own all that closely if I plan to own them for a long time. So let's have a look. Okay, requested pending announcement in relation to the execution of a contract that will have a material impact on earnings. Okay, this is way more interesting than a capital raising. In relation to the execution of a contract that will have a material impact on earnings. Now we can have a look at summary here. Buyers and sellers, there's no one selling below 63 cents. In fact, if I just had a look at this before I actually open up the announcement, this is a telltale sign that this is not a capital raising. If this was a capital raising, you would see a lot of sellers probably below 51.5 cents. So interesting announcement. I expect that announcement to be released 26th of right there, 30th. So on Monday. Got to wait till Monday. Anyway, so Findi. Just based on valuation, this company looks really interesting. McMillan Shakespeare. I saw this coming. I did own shares in SG Fleet and Smart Group, and then I sold them. And one of the main reasons I decided to buy shares in those companies. Now, I bought shares in these companies many, many years ago because I thought there was going to be consolidation in the sector. And there was a little bit of consolidation. And then I bought shares in these companies, two of these companies, because of EVs. The increase in people buying EVs through novated leases was on the increase, significant increase. There's all these tax benefits from doing that. In fact, I told a few people they should just get EVs through novated leases. That's the best way to do it. And then I saw this McMillan Shakespeare announcement, this AGM on the 27th. No, there was this trading update, first quarter for financial year 24. And what do you think? I've already mentioned EVs. What do you think the whole point of this trading update was in regards to EVs? So during the first quarter, McMillan Shakespeare achieved strong growth in novated leases sales, contributing to higher than expected MS group earnings. So this is sort of like not really a profit upgrade, but this is exactly what I want to see when you do own a company. And they do talk about here somewhere, blah, 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 at a higher average net amount finance, which has been particularly driven by growth in novated lease sales of electric vehicles. So again, electric vehicles. So this is a result of the ongoing increase in novated lease sales relating to EVs, while also maintaining the novated lease sales of internal combustion engines, which sort of makes sense. So more than likely, I would never take advantage of novated leases unless I was willing to buy an EV, and I'd be like a new customer of McMillan Shakespeare. So the share price of McMillan Shakespeare had been under pressure for some reason, and then the share price on this particular day rose 8.96%, so 9.6%. And I did say, if I don't see much selling in the next 3 days, I would consider taking a position in this company. So not only that, if you look at Smart Group, share price of this company popped up on this particular announcement from McMillan Shakespeare, and it popped up. No, I thought it popped up more than that, 2.8%. Definitely SG Fleet popped up. SG Fleet, which is it? SGF. Oh, yeah, well, yeah, it sort of did. I thought there was bigger reactions from both these companies, 24. Oh, no, it did. It popped up 7.9%, but the previous day it fell 5.8%. Anyway, so much more interesting reaction from McMillan Shakespeare. The share price of McMillan Shakespeare had fallen a lot previous to this, while the other two companies' share price hadn't. There's a few other companies in the similar sector on the ASX. There is one that changed its name, Fleet. I think it's called Fleet Partners now. Anyway, so possibly I could consider myself taking a position in McMillan Shakespeare. Next one is Ampol. So a company I probably would never think about taking a position in. And this company released a trading update. So you notice a lot of trading updates So third quarter trading update, and it looked really good. I'm gonna have to admit, this looked pretty good. Ampol. So everything's positive from the third quarter last year. LRM, which is light and refiner margin, up 27%. Refinery production, 1.5%. Total fuel sales volume for Ampol Group, up 26%. International fuel sales volume, up 96%. Z Energy fuel sales up 8.5%. Australian wholesale fuel sales up 17%. I'd like to know what international fuel sales volume was. I quickly went through this announcement, just the commentary, and I didn't see anything in regards to that. So I'd like to know or dig a little bit deeper. Although in saying that, this is sort of company I wouldn't be that interested in taking a longer term position, definitely a trading position. And when you look at the chart for Ampol, there's not really any sort of signal right now. And on the day, the share price did pop up about 4%. Share price has pulled back. And I'm wondering if the share price of this company is related to oil prices. Not that related, just by looking at this chart. Now on to further trading updates. Super Retail Group. So this company owns Rebel, one of the shoe stores. In fact, I'll tell you which shoe store in a second. Or maybe I don't. Who owns a shoe store? Anyway, so Super Retail Group owns Super Cheap Auto, that's the one. Rebel, BCF, which is boating, camping, fishing. Macpac, not even sure what Macpac does. So the main thing when I look at these trading updates from retailers is I look at like-for-like sales, which they did put on the second column, and they put in the third column like-for-like sales from financial year 23 to financial year 22. I'm not sure why, because there was really good growth from financial year 22 to financial year 23, and now they're saying the growth has significantly decreased. But I think they put that in just to show everyone there was really good growth 1 year ago, and now even though that growth has subsided, it's not negative. So that increase in sales has been maintained, and that's the way I look at it. If we saw negative like-for-like sales, that might be negative, but Super Cheap Auto up 4%, Rebel 0%, BCF 3%, Macpac down 8%, group altogether up 2% compared to 20% 1 year ago. And interesting reaction from the market. So share price has been quite volatile, but if you just look at this chart, it's all over the place. There's one day, must have been when they released their financial results, 17th of August, share price went up to $14.40 and then pulled back right back. So a lot of volatility in retail companies, and Super Retail is one of those companies where the share price is really volatile right now. I could see myself owning that company at some point in time. Woolworths released the trading update, first quarter sales results, up, if I remember correctly, 5%. Group sales up 5.3%, group e-com sales up 16%, group voice of customer, NPS, down 3 points. Australian food up 6.4%, Australian B2B up 1.5%, business to business, B2B, and New Zealand food up 5.8%. Not ideally, but in a normal environment, their sales should be up maybe 1 or 2%. In fact, they should be up by the population increase. We are seeing a fairly big population increase right now. For some reason, the government just wants us to bring a lot of people into the country, even though we don't have the infrastructure, housing to house all these people. It's just businesses want the ability to pay the employees lower wages, so they bring in people from overseas, even though we don't have the housing. So that's why housing prices are being maintained. Maybe that's their plan all along. The worst thing the government can happen, the worst thing for the government in power to happen is for housing prices to significantly fall, because house owners are a large voting bloc, and if they think the government is doing anything to decrease the value of their housing, they will be held to pay. So anyway, so some of this could be by inflation. Some of this could be because of margins, profiteering from Woolworths and from Coles. That's definitely a possibility. I'm not saying it is, but I wouldn't be surprising, because this is what companies do. When they say inflation, they will try to eke as much out of the inflation word as possible. And we did see Woolworths and Coles increase their margins, which is a sign of profiteering. Anyway, how did the market react? Let's have a look. I do remember the chart not being that good. Yes, the chart looks pretty ugly for Woolworths right now. So The daily chart looks pretty bad. Share price is now at 10-month low. Now, to be fair, Woolworths is significantly overvalued right now. The market cap, not the market cap, the price earnings ratio is 27. For a company that's going to grow, long-term grow its profit by about 1 or 2%, P/E ratio of 27% or 27 is ridiculous. But I can understand why people might have shares in this company right now, and that's just because they're defensive. Woolworths is very much a defensive company. Everyone has to buy food. If you don't have to buy food, and no one has to buy food for you, can you tell me how you live? I'd love to know how you live. But when you look at the weekly chart, it's been a beautiful uptrend. The time to buy this company was way back in 2016 at $16. And you can see the share price moved into uptrend. That's when to buy, when the share price has moved into uptrend, when there was negative sentiment or just after the negative sentiment has turned from negative to positive. That's the time to buy. Not now when the P/E ratio is 27. Back then, the P/E ratio probably was like 10, maybe even 8. Magellan Financial Group has had bad luck recently, and they have a change in leadership, I believe. Leadership announcement, 25th of October. Share price at one point that day dropped by 6%. I'm not even going to look at that announcement. Look at the weekly chart. It's a horror story. Share price has decreased from a high of $75 to $6.37. Share price is still in a downtrend. They had negative news on the 6th of October. I forget exactly what happened. That's funds under management dropped a lot, down 18.5%, and the share price keeps on falling. No bounce. So when you see no bounce after share price drops 18.5%, that's not good. That means there's no one interested in the company at all. No one wants to buy. And yeah, the share price keeps on falling. I wouldn't even think about buying this company yet. Just so much negative sentiment in this company. It did look like the sentiment was trying to shift from negative to positive. In fact, in August, when the company released their financial results, share price actually did increase 13.3% on the day. And there was a little bit of chatter about whether this is the time to buy Magellan Financial Group. Share price reached a high of $11 on the day. Hopefully no one bought shares. No one watching this video have bought shares on that day and have subsequently kept maintained their holding in the company, because the value of their holding in this company has fallen significantly since then. And not quite halved, but it's going in that direction. Kogan, talking about volatile, this company released a trading update which was worded positively. Here it is, October 2023 business update. And there was positive wording in this. For instance, returns to quality growth and continues to improve profitability. That's what I'm going to talk about. So even though gross sales down, so there is some things down, gross profit of $37.4 million increased 19.5%, gross margin of 36.3% improved 9.8 percentage points. So things are moving in the right direction for the company. And on this particular day, the share price increased 8.7%. And the next day, decreased 4.3%. And today, on Friday, the 27th of October, decreased 7.5%. And the reason behind that is just have a look at the chart. So there was probably a lack of volume when the company released that October business update. And the share price has moved into a short-term downtrend. So all these shareholders who bought at high prices in the past few months saw the share price bounce on the Wednesday, saw the opportunity to possibly sell out, and there has been increased selling pressure. And now the share price at $4.30 is at, well, it's only at a 4-month low. Anyway, and the share price has pulled through a support level, which was at about $4.70. So this actually looks pretty, chart for Kogan looks pretty negative right now. Short-term negative. Envirosuite, a company I have owned in the past. And there is one thing I'm waiting for when it comes to Envirosuite, and that is becoming free cash flow positive. I don't care about anything else. I don't care about annual recurring revenue that's above $60 million. I don't care about quarter one sales. So quarter one sales update, 3.7 million of sales, up 9% on previous corresponding period. Company AR grows 10% on previous corresponding period. They talk about net sales, total ARR, and there's nothing here about free cash flow. Even there's something about adjusted EBITDA. So they say here, Envirosuite reaffirms its outlook to deliver positive adjusted EBITDA less capitalized development on a run rate basis during financial year 24. I don't care about that. I want to know about cash flow. And it seems like maybe the market as well. Some big volume coming in today. Let's have a look at Envirosuite. 14.6 million shares traded. Let's look at course of sales. It could be just one big block of sales. I didn't see anything. There we go, yeah. So there was one block of shares traded, 14 million shares traded, worth $816,000. S3X2. Cross trade. And I think it's definitely cross trade. So it's the same broker. I forget what S3 means. Probably means something, but I don't really care. Anyway, so the whole point of that was just there's one big trade, cross trade, and that's why the volume was really high today. So sometimes when you see really big peaks in volume, that's not necessarily a good or bad sign. It's just one of these cross trades. What you want to see is really heightened volume over a few days, at least a few days. But anyway, Envirosuite's chart looks appalling right now. The company wants profit. I mean, the market wants profitability. Now, the market cap of this company is down to $71 million. So share price of this company has been as high as 30 cents, even more. Let's have a look at the weekly chart. Phone's going off. Oh, someone's texted me. Okay. Share price of this company has been as high as 38 cents back in 2019. We just want profitability. Envirosuite management, if you're listening, profitability, or even just free cash flow. Just give me some free cash flow. Energy One. So I have talked about this company in the past. There was a takeover bid for this company. I sold all my shares at $5.60 because I thought, this takeover bid might go through. It may not. If it doesn't go through, I can buy back in at lower prices in the future. This is my strategy whenever there is a takeover bid for a company I own, because it happens way more than there's two scenarios moving forward. This is the way I look at it. There is a possibility of a bidding war. That doesn't happen all that often. There's also a possibility of the takeover bid not going through, of it failing. That happens way more than a bidding war. And when that second scenario happens, the share price will drop. And so my strategy is when there's a takeover bid for my company, sell my shares as soon as possible. And then if the takeover bid goes through, you probably haven't, missed out on much of a rise. But if the takeover bid fails, buy back in at lower prices. And that is exactly what I've done with Energy One, because if you don't know right now, I've sort of hinted it already. This takeover bid with a company called STG, here we are, on the 25th of October. Forget exactly what happened here. Oh, they adjusted their takeover bid price from, I've got to zoom in. So from $5.85 to $5.15, and Energy One management said, get lost, take a hike. And then what happened with the share price? The share price dropped. So there he is. Here he is. On the 28th of August, there was a takeover bid. Share price rose 35% on the day. I sold at $5.60. I could have sold at $5.70. So, not much difference. So the takeover bid was $5.85. I sold at $5.60, and I was just following it. And if I saw any announcement from the company where the takeover bid fell through, I would buy back in. And I've almost completely bought back in. In fact, if we look at the summary here, buyers and sellers, here is my bid at $4.22. Now, the majority of my bid has gone through. I'm a little bit, I wanted all my shares to go through, and the share price is now $4.46. So there's a possibility that my rest of my bid, 239 shares, not a lot. So we're talking about not quite close to $1,000. Yeah. So anyway, and the shares in this company are illiquidly traded. We don't see much volume. So only 6,992 shares traded today. And it got close. It opened at $4.25. It got so close. All I needed was one person, one investor to sell at $4.22, and all my my shares would have been hit that I wanted to buy. So anyway, that's how I play potential takeovers for companies. I've heard some people say, sell half of your shares just in case there's a bidding war, but I just sell completely out and then buy back in. And not only that, I bought more shares. So I sold my shares. Even though my whole bid hasn't gone through, I now am a shareholder of more shares of Energy One because of this failed takeover bid for the company. Damstra. Another company I have a very small holding in. When I say small, I had like $200 in this company, and this is a different scenario. And I'm sort of telling what. Okay, so okay, here we go. So the company went into a trading halt on the 25th. Damstra receives indicative proposals and grants exclusivity. So this means that the potential takeover bid for this company, and it was at a significant premium. We are talking significant premium, 30 cents. So this takeover bid was at 30 cents. Why is that significant? The day this takeover bid was announced, the share price was 10 cents. So we're talking about a 200% increase in share price, a premium in share price. So on this particular day, when this takeover bid was announced, the share price rose 140% on pretty big volume as well. I did not sell my shares in this company simply because it was just pointless. Now, my holding went from $200 to $400, so it was just pointless. And I'm just going to see what plays out now. And I think the reason there's a takeover bid for Damstra is because they did release their quarterly report last week. And I think there's people out there who know this company might be cheap. It might be cheap based off what we have seen in their Appendix 4C. So yeah, so that's the chart. And this could be the breakout. But again, this could be a fair takeover bid. They actually mentioned in the announcement that there is no certainty that any buying transaction will proceed or eventuate. So there is a possibility the share price will drop a fair bit if this takeover bid does not go through. But I don't care. It's not a lot of money. It's not like Energy One where I did actually have a lot of money in that company. So that's Damstra. In fact, the last time the share price was this high was way back in July 2022, where it was this bounce. And that was almost at the top of the bounce. Company called Halo Technologies. Oh, yes. I remember this one now. Not Halozyme, Halo Technologies. I've had a look at this company in the past. Not interested. And then there was an ASX price query on the 25th because the share price rose 178%. You can see a lot of increases in prices the week leading up to this. So obviously there was no announcement from this company. All there was a price query. So what does a price query say? I actually do remember someone saying there was a recommendation by, here it is, I actually do mention this. It has come to our attention that Pitt Street Research has issued an equities research report in regards to Halo Technology. So obviously that Pitt Street Research was highly favorable to Halo Technologies, and sometimes that happens. So all it takes is a bit of research from a company like Pitt Street Research to see share price rise like that. So look at the chart. Halo Technologies listed on the ASX back in May 2022. Share price got as high as $1.20. Share price now 16 cents. Well-defined downtrend. This could be the breakout for the company. But I don't really get excited about these sort of reasons for share price rising because I've seen this in the past when the share price rises because of a favorable research report and that interest in the company dies away really quickly. It can die away really quickly because those who read the research report bought in on the day and then the share price just continues to drip down and down from there because it's not on the back of positive financial news from the company. Research report is not positive financial news. We need to see the company release positive financial news. This company had revenue of $5.8 million in the last financial year and is loss-making. So this is a sort of company where I'm watching and looking for Appendix 4Cs. JB Hi-Fi, another retail company, they released, I don't think there was much to really talk about when it comes to JB Hi-Fi, share price up today. This was the AGM, and I also did a sales report. So I mentioned in that Bapcor video that when a company does an AGM, a lot of times they will give a trading update. It's just good that this company decided to release a trading update apart from the AGM stuff. So what we're looking for here is like-for-like sales. So if you look at tail sales, don't ignore that one. Comparable sales growth of negative 1.4%. JB Hi-Fi. I wonder if there's a table here. No table. New Zealand JB Hi-Fi down 1%. And Good Guys down 12.2%. So you might think the market didn't like it. Whoa. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 down days in a row for JB Hi-Fi. And now we have a positive day. So to be fair, not much of a negative reaction from the market. when it comes to JB Hi-Fi. Share price going sideways. I am a shareholder of this company, by the way, and I would probably consider buying more shares in this company if it fell to maybe $35 to $30. PE ratio of this company is 9.2. So I don't think it's going to fall that low unless this company sees a significant decrease in their profits. Brambles did do another company released a trading update, and just based off the market reaction over the last few days, it's been negative. I saw this 26th. This was on the Thursday. I thought it was positive. So this is why I wait to see the market reaction. I thought this was positive. It sounded positive. Sales revenue growth up 30% at constant foreign exchange rates. Financial year 24 guidance reconfirmed. It sounded positive. But when you look at the chart, that doesn't look positive. It looks pretty negative, the reaction from the market. So obviously I'm stupid and I have no idea. Although maybe I just have to go through the announcement with a finer comb. But yeah, for some reason, the market didn't like it, particularly today. The day after the announcement was released, the share price fell 5.7%. Or maybe it's just unrelated. Reliance Worldwide is another company. I've been a shareholder in the past. And they also released a trading update. They had the AGM and released a trading update. So again, the importance of AGMs should not be understated. Companies release trading updates when they have, a lot of companies release trading updates when they have their AGM. That's why AGMs are really important. And they say here, Reliance Worldwide Corporation, ongoing resilience of repair and remodel activity underpins first quarter. So obviously there was some positiveness in this particular report. Did the market see the same thing? Well, it's hard to see. Share price is in a downtrend right now. Was it an uptrend? Now it's going down. I will take a position in this company if it falls to, say, below $3. That's my number. Below $3, I'll become interested in taking a position in this company. PE ratio currently 13.2. So I would be looking for value when it comes to Reliance Worldwide Corporation. Boral, I'm pretty sure this company also released a trading update. You notice the common theme in this video, a lot of companies releasing trading updates. Now, they just had a presentation, and that's it. The annual general meeting and the presentation, no trading update. They must have had a trading update in this. That's why I included it in the video. I can't remember. My memory is sometimes bad. Let's have a look. Oh, okay, here we are. So moving to financial year 24 outlook statement. Trading performance for the first quarter of financial year 24 has been pleasing. Now I remember why I include this. I just like the word pleasing. With price escalation from last year holding up based on current external factors, blah, blah, blah. It's reconfirming financial year 24 guidance. So this is not a profit upgrade or profit downgrade, but nice growth from 1 year ago. So this is just a case of a company just reconfirming their guidance. So it's not a bad thing, not a good thing. And when we look at the daily chart for Boral, share price still in an uptrend. Oh, yeah, I'm going to call this an uptrend for Boral. But it's concerning that we did see share price rise significantly when they released their financial results in August. Share price got above $5, and I think it's going to struggle to get above $5 again because there's just too much volume, and share price stayed up there for too long. So a lot of shareholders bought in around about $5 or between $5 and $5.10. So there's a little bit of resistance moving forward for this company. And what the company needed to release was a profit upgrade. And that could have seen the share price get above $5.10. So there's a little bit of resistance at those levels. GEM, G8 Education. Now, if you've been investing on the ASX for over 10 years, you will know about this company because this was like a childcare centre company, a roll-up model that kept acquiring new child centres, and then that acquisition phase came to an end, and they have agreed to divest centres. So now they've gone from acquiring centres to selling centres. And a trading update. Share price took a plunge, if I remember correctly, on this day. It took a plunge. Share price fell 11.8%. I'm not even going to read the announcement. And let's have a look at the weekly chart. You'll be able to see, yeah, look at that beautiful chart. Whoa, whoa, whoa. So we're talking about the period between 2010 and 2014. I thought it was later than that, the top. This is, look at that. The share price went, at the start of the uptrend in March 2012, share price of this company went from 80 cents to $5.20. This is when they were acquiring centers, and then it all, I wouldn't say it all came unstuck, but the more and more centers they acquired, they had to pay more and more for the next centers they acquired, which makes sense. And then this is why this sort of company, this roll-up model, is not sustainable for the long term. Share price of this company has fallen from $5.20 down to 99 cents. So I barely look at this company. This is like the first time I've looked at this company for a long time. Now onto a disaster story that is Webcentral, WCG. Well, I'm saying it's a disaster story. The share price increased 177% today. The reason behind that, the company went into a trading halt yesterday, and then at 7:38 p.m. announced Webcentral sale of retail domains and hosting business. Also did an investor presentation, and I saw this and I went, this is interesting, because the market cap of this company, according to TradingView, was 36 million. So market index should be much higher now, 36 million, 100 million. So TradingView market capitalization is yesterday, at the end of trading yesterday. So they don't update it, but market index is updated. So that's why there's a significant difference between the market in market index and what's the other one, TradingView. So why did the share price increase 177%? And I was not surprised to see the share price increase. I had a quick look at this, and look at the price they're selling it for. They're selling this, what are they selling for? A total value of 165 million. I'm not sure if they're going to get all of that. Total transaction value of 165 million. Net cash proceeds of 115 million. Net cash of 84 million after debt repayment and transaction cost. Remember, this company had a markup of 36 million. This is why the markup and the share price rose 177%, because markup 36 million, net cash position of 84 million after debt repayment and transaction costs. So obviously this is a significant announcement from the company. That's why the share price rose. But look at the chart. I'm pretty sure this is a merger of two companies, Melbourne IT, or the old Melbourne IT, and 5G Networks. I'm pretty sure it was a merger of these two companies. It didn't work based off this chart. Share price in a well-defined downtrend. Share price going sideways since about May, and then the share price just popped up today. 170. I should have bought this on open. So they opened at 24 cents. That was still way lower than the value of the cash. Because the markup now $100 million, cash on hand 84, and if the share price opened up at 24 cents, yeah, the market, maybe the markup at 24 cents is around the value of the cash, if that makes sense. So that's Webcentral. Oh, Resmed. Two more companies to go. It's probably a longer video than I expected. Resmed down 4%. Resmed announces results for the first quarter, financial year 24. I'm really thinking of buying more shares in this company. The only negative thing about this company, so revenue up 16%. The only negative is margins contracted. And as soon as I saw margins contracting to 50, gross margins contracted to 54.4%, I went, oh, the market's going to sell off, and the market did it. Operating cash flow of 286.3 million. And yeah, so if this company had an increase in revenue, increase in margins, I think the share price of this company would have increased. So the market, and one of the reasons why the share price fell significantly in August was because of decreasing margins. So that's one thing they've got to really control now is decrease. They do talk about why the margins decrease somewhere here. I remember reading it. So gross margins decreased by 250 basis points, mainly due to costs associated with the field safety notification on Astral devices and higher component and manufacturing costs, partially offset by favorable product mix, blah, blah, blah. So if the market continues to see margins decrease for this company, that would be a concerning thing. Decreasing gross margins is a sign a company is losing their competitive advantage. And I think that is a concern of the market right now. So next quarter, what Resmed management want to see in their business is increasing gross margins. If that happens, I would not be surprised to see the low in the share price for this company. But I think there is possible value currently for Resmed. P ratio 24.8. And the last company is Harvey Norman, another company, retail company that released a retail update, a trading update. This looked negative. I'm surprised the share price is up 4.8%. This looked negative on first glance. And again, I'm stupid. And what I think is not always going to be true. So aggregated sales revenue for the period down 9.1%. Well, they're funny. They say down negative 9.1%. So there's two negatives there. So it should be up 9.1%. You can't say down negative 9.1%, if you understand what I'm saying. But it's just them. Australian franchises down 13.6%. We'll look at comparable. Australian franchises down 13.9%. New Zealand down 3.3%. Slovenia and Croatia down 5.2%. Malaysia down 8.4%. Nice increase in sales in Ireland, up 12.6%. What's happening in Ireland? Up 7.7% in Singapore, up 2.3% in Northern Ireland. What's happening in Ireland? Nice increase there. But I saw that and I thought, whoa, the share price should take a hammering. Share price up 4.8%. But look at the 1 minute chart. Come on, trading view. So on open, if it happens, just take your time, trading view, no rush. So on open, the share price did drop 2% in the first minute and dropped another 0.6% in the next minute. So you can see on open, the share price did go down. Share price went to a low of $3.44. So I don't know what caused the excitement in the market, why the share price rose. Maybe there was something hidden in the announcement that caused the excitement. But comparable sales down 9.1%. Was that total sales? Aggregated sales, yeah. Comparable aggregated sales down 10%. Interesting. Anyway, so the market reacted completely different than I thought they would when it comes to Harvey Norman. So that's all I've got for today's video. This went for a little bit longer than I expected. The dogs are waiting patiently for a treat. Oh no, they're sleeping. They just got sick of me. They get a treat at the same time every day at 4 p.m. and it's now 4:30 p.m. So this video has gone one of my longest videos, in fact. I should end it. Have a good day. Have a good weekend. Talk to you later. Bye. And probably the last thing I should mention is that I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.